So, you've found the house, you've put in the offer, and the seller has said yes. Now what? Here's what happens after you go under contract. Firstly, there are a number of timelines that are going to run all at the same time. Now, you may go, oh my gosh, I can't remember all of that. Well, if you have an agent, that's their job to help you remember that. Something that I do with all of my clients is I send them a very long, feels like an essay, feels like you're reading an essay email that lays out all of the contingencies, what they are, what they mean, when they end, and what you have to do to complete them. So don't worry about that. I don't know if that's something that every agent does, but that is something that I do. Number one, Earnest Money. Earnest Money is a show of earnest for the seller that you really want to purchase the home. This is kind of like an accountability keeper, as I like to refer to it as. It's an upfront fee that you'll have to turn into escrow within the first couple of days of going under contract. Now, why do I call it an accountability keeper? Well, the Earnest Money is the tool that we use in order to keep everyone in the contract. If buyer breaches contract without a legal reason to, seller should get to keep the earnest money. If seller breaches contract without a legal reason to, buyer should get to keep the earnest money. It's accountability keeper, it helps. Number two is the inspection. It is so important to get a home inspection on any form of real estate that you purchase. If there's a house on it, get an inspection. The reason is the inspector is going to go through every nook and cranny of the home. They should be on the roof or they should be under the house if they have the opportunity to. That report is going to tell you everything that could be wrong with the house that you can't see from a visual inspection of the home just during a showing. Now, keep in mind, it's going to be a freakishly long report and it's going to have every little tiny thing that is wrong with the house on it. Most of those are going to be maintenance issues, usually. But it can also point out issues with the roof, issues with the sewer line, issues with plumbing, electrical problems, if things aren't closing right, things like that you can't see or wouldn't notice during your first walkthrough of the home. They're so important. Number three is the information verification period. This is the period in time where you as a buyer and your agent have the opportunity to go through and verify everything that the seller put in the listing to be correct. You also have your title insurance contingency and your homeowner's insurance contingency. Now, title is when you receive the title report as a buyer, you have an opportunity to read through it and see if there are any exceptions that you disapprove of. Things like encroachments, liens, overdue taxes, things of that nature. If there is something that you don't approve of, we let the seller know, and then the seller has a certain amount of time to let us know that they will clear it by closing, because you can only purchase a home when it has clear title. Now, your homeowner's insurance contingency is especially important if you finance a property, because if you finance a property, you have to have homeowner's insurance. This contingency allows you to, one, find out if you can insure the home. Not every home is insurable. And also to make sure that you get a binder that is an acceptable amount. This is specified on the contract. Now, like I said, all of those happen right at the very beginning. So there is going to be typically about a 2-week period with less activity. If you're financing a home and you're waiting on the appraisal, that is. When you finance a home, there is going to be an appraisal. Sometimes there are exceptions. Like if your down payment is 50% or more of the purchase price, the bank may choose to waive the appraisal. Now, this is not a guarantee, it's just something that happens every now and then. But in between your inspection, which usually ends within the first 10 days, that's the default anyway, there's going to be a little bit of time in between then and the appraisal where things are pretty quiet. Now, what is an appraisal? An appraisal is the bank's inspection of the home using an appraiser to determine the actual value of the house. Now, it is called an appraisal inspection. It is not the same as a general home inspection. Both are so important, one of which is required if you do financing, unless otherwise exempt by the bank. But it's not the same as a general home inspection. An appraiser is going to go out and look at the property and find any issues that the bank wouldn't want to finance on. Now, sometimes the appraiser goes out and finds no issues and they say, great, the house is worth what you're purchasing it for, move on, no problem. Sometimes they say, hey, house looks good and it's worth more than what you're purchasing it for, move on, no problem. Sometimes they say, hey, the house is worth what you're buying it for, but you got to fix these couple of things first in order to bring it up there. Then we go into negotiations with the seller. Now, what those negotiations are going to look like entirely depends on your situation and the seller's situation. Seller can say, hey, buyer, I'll split the difference with you and we'll bring the purchase price to that number. Buyer can offer to pay up to whatever they need to. Seller can offer to lower the purchase price to whatever it needs to be. You can come to an agreement about who does what repairs. There's a lot of different ways that you can go about that situation. Now, we've gotten through the appraisal, and your lender should have given you a disclosure form that you have 3 days to read. Now, this is a federal law. It is something that they implemented to avoid predatory lending. We've gotten through the appraisal, we've gotten through the inspection, all the information is correct, and we are just waiting to close. Now, you're going to go sign every document that you've already signed again, but by hand this time. You're going to go to the escrow office and sign all of the closing documents, most of which you've already seen, some of which you haven't. The escrow officer will explain everything along the way. So only 2 more steps after this. 1 is hurry up and wait. The officer has to take all of the documents down to the courthouse to record them before you can actually move in. Now, you'll hear closing tossed around a little bit. Closing in and of itself is when documents are recorded at the courthouse. That is closing. Day is the day when documents are recorded at the courthouse. Step after that, move in.